Dairy producer Clover reported robust interim earnings due to selling price increases and a very good improvement in the operating margin. The company's chief executive, Johann Vorster, is with us in studio here. Operating margin up from 3.5% to almost 5.5%. Your volumes are about the same. If you make that much more profit margin, then the bottom line is going to shoot up. And it did, nearly doubled in the 6-month period. Is this a new strategy for you?
Yes, Alec, I think first of all one needs to look at it compared to the previous year when we had 4 or 5 new product and platform launches in the corresponding period. So there was higher costs in that corresponding period than there were here now. But also we managed to get our price increases through. That was very important. And then the Project Yellow Blue savings started to come through. So it's a combination of 3 different things that drove that margin back to where it should be.
When you say managed to get price increases through, you don't regulate it in that regard, are you?
We're not regulated now, but sometimes you have some pushback. So we've increased the prices to the consumer. The brand fortunately could handle it. We are going with new price increases again because we've increased the price to the producers, the farmers lately. And we'll see how that turns out. But yes, our price increases have generally been very well accepted in the past, in the 6 months.
It's business 101, isn't it? If you can push your prices further and the market will absorb that price increase, then good luck to you, your profits improve. But are you starting to get resistance now from
I think so, yeah, definitely. The consumer's under pressure. The retailers will also, they're under pressure as well, so they try to push back as much as they possibly can. But you've got to concentrate on the value proposition. You've got to give your consumer more, you've got to communicate more. So we've moved from 12 days milk to 18 days expiry date, the 30 days ultra pasteurized milk. So we keep on innovating in this sphere. So you've got to, when you go with a price increase, it's very important to then also offer the consumer more. And I think that's been part of our success.
What's happened to sales after the prices went up? Do you get an immediate reduction where people say, well, I'd rather go to the competitor, but then eventually come back to you?
As the market leader in most of the categories, we find that. Then your competition is a bit reluctant to increase, they take advantage of that period. So it normally goes down slightly and then it recovers again as everybody follows. So as a market leader, you always have that pressure.
Is milk brand conscious, or are consumers brand conscious when buying milk, or do they just buy on price?
Generally, milk is price elastic. In other words, if you make the price much lower, then you wouldn't sell much more. But Clover's prices are very elastic. So if we go out on a promotion, Clover is an aspirational brand, and it's got good quality. So the moment you go on promotion, you get a very big kick up. So it's a bit of the combination of an answer there.
And how are the farmers feeling about this? Of course, those who've kept their shares would be delighted, but those who are selling into you?
I think the ones that kept it, of course, they will be very happy. The ones who hasn't, they've invested a lot on their farms. So I think they're also in a good position because now they at higher prices can supply the market. So perhaps some of them are better off by having sold their shares.
So the volumes are the same?
The volumes in the country keeps on going up. There are less farmers, but there are more volumes. So your more efficient farmers will gobble up all the smaller farmers. And so we hear from time to time that the industry is shrinking, but it's a number of players. Big farms becoming bigger and more sophisticated. New technologies are being introduced. So I think the Clover, the dairy industry is very healthy in South Africa. And there's no reason why we shouldn't be the Fonterra of the world for Africa, now that the prices internationally are very high.
The big deal that you did in this period was more aggressive in bottled water. Taking out Nestlé's well-known brands there. Is that just Gauteng or the whole country?
No, that's the whole country. That's both Nestlé Pure Life Water as well as some of the other brands, Quinspruit, and as well as the iced tea, Nestea, which we are relaunching in August.
It's a long way from milk.
Yes, but our competencies don't only lie in milk. We're very good in production, we're very good in merchandising, the second biggest merchandising company in the country. We are very good with sales, we're very good with distribution, chill distribution. So our competencies lie across the value chain and not only in products. So when we launch or looking for acquisitions like we are now, currently we're in a quite aggressive acquisitive mode. We look across all of the supply chain functions where we're good at for opportunities. And Nestlé was one of those, where we are good in distribution and production, and we've already helped them a lot there with increasing the market share.
Nestlé is a Swiss company. They've invested a lot in a new plant in Escort, for instance, so they are investing in South Africa. Why would they want to get out of bottled water?
Bottled water and iced tea, they suffered with production. We've taken over the production facilities. We've got 70%, they've got 30%. And then distribution is key. To get, we've got 14,000 delivery points, so it was very important for them to get there. But for another example is Future Life, where they're in cereals and they've come to us, and we've now got a 50-50 joint venture with them where we will do all the production, the development of a ready-to-drink version of Future Life, which is a very popular cereal, has started to become very popular. So there we use our production capabilities again to help them.
Johann, you guys have been very smart at this in using the areas that were neglected in Clover in the past, but you've been well remunerated for it, and I know quite a few farmers across it at the way that executives are being paid. How do you respond to them when you get criticised?
I think that there are two angles to it. The first is we've unlocked a lot of value to the producers, and there was a management team and the farmers before the listing. Before the listing, we started and we put the deal together. So none of those producers are offended. I think it's the people who came in afterwards that see some of these amounts and then don't understand the history where it came from. But Clover was on its knees by the time when I took over in 2006. So I sleep well at night. Maybe some other people are maybe don't see it in the same light. But I think a lot of value has been unlocked to all of the stakeholders across the sphere.
How many of the farmers have stayed with you, have remained as shareholders?
We've got the Milk Producer Trust, which is 15%, and another 15% of producers who stayed. So I would say roughly about 40% have sold out. But sold out, and many of them had reinvested into dairy, but just on their farms, which was very clever because their parlours are now world-class and the technology that they use. So I think they made a very good decision.
When you say world-class, are you seeing that in the prices and the quality that you're getting from those farmers?
Absolutely. There's a small little competition, they call it the Tri-Nations, between New Zealand, Australia and South Africa, milk producers. And our milk producers are amongst the top 10 in that competition annually. And as I mentioned a little bit earlier, there's no reason why South Africa, with its infrastructure and the potential for dairy, cannot become the Fonterra for Africa, like Fonterra is for the world. I think there's a great opportunity for dairy expansion. The prices are very good. I'm talking about ingredients, powders, sophisticated whey powder concentrates and all of that. And it's untapped territory at the moment for South Africa.
And more and more it is transportable because it lasts longer.
Exactly.
Your processes.
Yeah. So that whole Natal, Eastern Cape, Southern Cape area is completely untapped, and we're looking at opportunities to do that now that Cielo Blue is settled. Remember we said Cielo Blue must be settled first. And our next wave is the yogurt that we're entering the 1st of January, and then the custard. So we've got a lot of opportunities locally here, and then export opportunities with these ingredients that we're looking at.
So you tackle the distribution challenges into the other parts of the continent, which, as we've heard from others, are not inconsiderable.
Yes, I think that when you go into Africa, you know, the word Africa, I think, should be abandoned. You know, there is no one Africa. Africa is as different as Eastern Europe, Western Europe, Southern, Northern, Scandinavian, and then within cities in Africa there's a big difference. You know, so we can't just refer to Africa. And also, when you talk about these big cities, you've got to understand what do you want to do in that big city. You know, so some people will decide to go and they've got a world-class product which they would like to sell there. We don't have that. What we have is competencies in route to market. So we would first, in Nigeria, we are busy developing a route to market. How do we get the product to the consumer? And we contract packing there. Once we've got that, then we can start introducing more manufacturing in there. In Angola, it's a different story. There you need production. In Mozambique, we're using our distribution and merchandising skills. So Clover is exporting its competencies as opposed to its products. The products will follow. And there we have a number of products that can fit in well there. Long life juices, long life milk, yogurts, long life yogurts we're planning to make, iced tea, water, etc.
And now bottled water, indeed. Johann Vorster is the Chief Executive of Clover.